So today we're just gonna go through something very simple, something very light, something very superficial to your journey and how you're gonna basically keep learning from your mistakes and making sure that you keep track of everything that you're doing and everything that is happening. So what this is called backtesting. And backtesting is a very important part of your trading journey and part of your trading psychology, strategy, knowledge is part of everything. You have to backtest if you are a trader and you want to learn from your mistakes and even learn from your correct things that you did and see how you can implement them again. Look at the setup again, try to see any errors that may have happened, try to see if you may have missed something, try to see if you could have gained more than what you could have gained, and see why is that. So it's always good to correct your personality as a trader and correct how you approach the markets and how you are able to become a better you. And that's only through backtesting. So if you things that you have to know when you're backtesting is that you should be backtesting something that you know or something that you are willing to know. It has to be something that is very fundamental to you. So usually when I backtest American pairs because I trade the New York session. So I trade anything that's New York dominated. So right here you see I opened US 100. So I usually backtest either gold, US 100, USD CAD and stuff. So firstly, get your pair. Which pair would you want to backtest? Why do you want to backtest it? Do you trade it often? Do you not trade it often? Are you trying to learn something? Know why you're backtesting it. So currently, I'll be backtesting in order to see basically what's the general move of NASDAQ and where we are to see NASDAQ going. So if we just look at NASDAQ, you gotta know which chart you are on as well. So usually when I backtest, I like to go through a variety of 4 different charts. I like to go through, basically if I started from the bottom, we'll go from 5 minutes. I like to see the 5 minute chart. From the 5 minute, we go to the hour chart. Then from the hour chart, I like to go to the 4 hour and then to cap everything off daily. Is a daily candle. So these 4 charts is basically going to give you a whole preference of what the market looks like. So usually pick about 4 different charts that you would like to either backtest through. I like the 5 minute, the 1 hour, 4 hour, and the daily. Those are my essential charts. So if I'm looking at the 5 minute, that means I'm looking for something that's recent, something that's happened, um, very recent, and I'm trying to basically see what happened. If I'm trying to see what happened yesterday and how I can predict it to happen into today, I would look at my 5 minute chart, you know. So I'm just gonna look for yeah. This is this is a this area which I've been back testing currently. So I'm just gonna go through how I would basically see that back testing. So the first thing that I would like to do when I'm back testing or when I'm analyzing, because when you back test, you also have to analyze. I need to firstly find the liquidity. I have to find the liquidity. So currently I've found that the liquidity pool is here. This is the liquidity pool, and this is where the funds have been made. So I would like to see where the liquidity is. Liquidity also being that I'm looking for the trend. So I'll just make a list. Number one, trend. Trend is what I'm looking for. Number two, after I see the trend, I need to basically get the volatility. How's the volatility within the trend? So I'll say volume. So I'll see the volume. What's the volume like? And then 3, duration, how long it took in order for the liquidity to be there. And I would look for manipulation, besides manipulation. And then I would look for a signal. Where did they send the signal? After manipulation, we know we get the signal. So if we look at number 1, the trend is here. We can see it with the buy side trend, sell side trend, and it's basically creating a pool of liquidity. So once pool is created, we need to find what is the volume. So we can see that the volume is minimal, and it's been moving in price action in certain areas. So we know that there is a lot of liquidity that's put into this, and we see that the price action is basically breaking whatever barrier or order block that was placed there. So a lot of orders were probably placed there, and then the price action broke through it, creating more liquidity. So we see that it's a price action, and then it consolidates, retraces, and then price action again. So that's basically how it's been moving. And then we see the consolidation. So we see that the volume is basically minimal and is distributed throughout certain periods within the market. So the duration, we need to know how long it took. This is about from the 5th till the 11th. This is about a week. It's about a week to accumulate, and it accumulated throughout the Friday, the previous Friday, which was NFP. So this was from non-farm payroll. So usually what actually happens after NFP is that the market will start to take a direction, either that's from NFP or opposite NFP after the following week. So the following week, we are to see it as a trending week, which is why this is actually such a good setup. So this was a weekly setup of the NFP, which is, we know that NFP is high volume. So as we know, the volume was distributed throughout NFP. And then Tuesday, probably here, you could have had another fundamental that could have boosted the price. So it just took about a week to generate. I mean, if you are also on the 5-minute chart, you'll be able to see these same things. There's also trends that are created here, and there's also volume and manipulation, and how long it took as well, depending on the chart you're looking at. Right now, we're looking at the 1-hour chart. So as you can see here, we have the duration. After the duration, we're looking for where the manipulation is. So there's been a lot of manipulation, as you can see, especially when they do break these orders. For many traders that don't understand ICT as much, this for them would have been a point to sell. This is how they would have caught you and trapped you here. They would have did another catch and trap here as well. As you can see that there was a lot of volume manipulation here in order to confuse a lot of people, and then the trade went. Again, they created an order, it retraced, and then manipulation. After it retraced, it created a trend, number 1. After it created a trend, volume came in. You can see the volume. And then after then, manipulation. This is where the manipulation is. They manipulated the market, and then it carried on. So if we went on a 5-minute chart, you would be able to see exactly what I'm talking about. Let's just take it here. On some of these, yes, just want to bring this close by so you can also view it properly. So after this retrace, we get the trend comes in. And as the trend comes in, the volume increases. The volume is minimal, which shows that it is a trend because the volume is minimal. The volume is not aesthetic and basically very volatile. It's just minimal, which also indicates that it's a trend. So after that, there is duration. So this accumulated from about Thursday, Tuesday, about 7 after this downfall during New York, and then they just trended it up throughout the day. So it took about 24 hours. That's a good duration as well. So you see these things are in succession, a day's worth of duration, and then that's when they release the trade, or a week worth, and then that's where they release the trade. So these things are very compartmentalized. So from this area, this is about 4. This is 4. You got your manipulation. So they manipulated the markets here. A lot of traders who don't see ICT properly or SMC would have seen this as a sell, and they would have probably entered a sell and then would have gotten chopped out, as this would have been a fake. And then this is where the manipulation is. After the manipulation, you get the signal. The signal is here, as they are still respecting the bigger trend, which is on the 1 hour chart, which you might not per se see on the 5 minute chart, because the 5 minute chart also has its trend, which was broken in order for to respect the 1 hour chart. See, and then we come to the 1 hour. So all of these things, they align to each other. So let's come here, let's bring it back to the 1 hour. So after them, you see it again, manipulation that broke up, and then this is where the character changed. The market moved sideways, consolidation. After consolidated, there was manipulation again as the price peaked up. If you just see, the price peaked up, so this was manipulation. In order for them to have a liquidity grab, manipulation can come in a form of liquidity grab as well. So it grabbed it, and then it started selling, collecting all of the liquidity, and this is where the signal is. So once you start to see that, when you start to backtest moves like that, you will start to see how moves will unfold as they go. And to always look at the 1 hour chart and the 5 minute chart, look at what happened in previous. So this was just a quick breakdown of backtesting, which will be just for this US 100. I will be uploading more videos on backtesting other pairs and stuff, but this was just a way for you to learn how to backtest quickly and make sure you use that to your advantage. There are more tools and strategies that you can use to approach backtesting, as this is the most easiest and simplest way you can do across all of the chart lines. Yeah, so that will just be it for me. I hope you do follow this. Let me know in the comments what else, if I missed out anything, if there's anything you also like to know, and then I'll make sure to do a video on that or just reply to you individually. Okay, that's just that for me. My name is OK Sabata, and thanks for joining my live session.